afternoon. Welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, what's really buzzing in trade right now. We'll also speak to the management of PVR Inox to really understand the insights from the Q4 earnings and the outlook on the business going forward from here quite shortly as well. And we will also get you expert voices on the markets and the movement from here on in the closing trades and what to expect in tomorrow's trading session as well. But first up, a quick check on how the markets are doing as we begin the last half an hour of trade. Well, markets have been subdued from the morning trade and you do see about a 0.5% decline now on the Nifty and the Sensex. So it has actually weakened in the second half of trading session. 90 points of a cut for the Nifty. It's now at 18,300. Even the Sensex has slipped below the 62,000 mark. It's down by 350 odd points. So volatility clearly taking over the markets. But the broader markets, they are still looking up, although they've also seen sell-off coming in from the high points of the day. About 0.1% of gains remaining on the small caps, the mid caps up by 0.3 odd percent. In terms of the sectoral indices, most of the sectors are actually trading peak, with Nifty Bank down by about 0.2 odd percent. Autos declining by 0.7%, half odd percent of a cut for the financial services, and the FMCG stocks are also declining by 0.2% odd. Metals also in tow, and also pharma stocks, private banks, they are all clearly seeing some pressure points. Apart from this, the stocks and the sectors that are actually looking up, despite this muted trade in the markets, you're seeing IT stocks are, up in trade today about 0.3% odd. The PSU banks really rallying from the front despite this overall reduction in the markets, and probably led by the buoyancy in the earnings that we are seeing for the PSU banks. Bank of Baroda, for example, reported a 168% jump right there as well. So those are the stocks which are gainers despite the overall muted trend. You have SBI, NTPC, Bajaj Finance looking up by 1.5% odd. Bajaj Finserv also pulling up, HUL, Hindalco, the other stocks that are up in trade about half odd percent. On the other side, you do have HDFC Twins down in trade. Of course, it's the ex-dividend date. Adani Group of stocks still trading muted. Now it's below the 1900 mark as well. M&M, HDFC Bank, Maruti Suzuki, Tata Motors, all of them declining in trade. But let's shift focus on the earnings radar. The company on our focus list today is PVR Inox, that actually slipped into losses in the fourth quarter of fiscal 2023, hit by merger and related one-time expenses as far as both the PVR and Inox is concerned, and higher costs on account of the planned shutdowns of some cinemas as well. But its revenues definitely surpassed expectations this time around. The country's largest multiplex operator did post a loss of 333 odd crore rupees in the quarter ending March. The revenues, however, jumped 22% to 1143 crores. EBITDA, however, was down 9%. We also saw the margins, contracting to about 23% odd right now. To discuss more about the insights on the numbers, we have with us Mr. Nitin Sood, the CFO of PVR Inox, joining right in. Mr. Sood, good afternoon, and thank you so much for taking the time out for this discussion. Well, it's been a mixed quarter so far. Revenues coming up above expectations, but definitely these one-offs impacting the earnings, just like how I pointed out. I will definitely talk to you about the earnings and the fine print right there. But just to get a sense for our wider audience, it's been about a year since you really reopened after COVID. Have things really come back to normalcy or still some time away?
Yeah, I think, it's been a year. Yeah, can you hear me?
Yes, I can.
Yeah, so this has been a year with a little bit of hits and misses. We started off with a very strong first quarter on back of RRR and KGF. And then, the second quarter was not so great with three big Hindi films, flopping at the box office. So what we've seen this year has been a lot of volatility. I think the Hindi film industry is something which is underperformed in terms of box office performance. Very strong performance from regional films. And Hollywood films have done well, but there was almost 40-50% lower quantity in terms of Hollywood film releases this year. So, it's been a slightly, I would say a recovery year. We haven't yet fully bounced back to where we were pre-COVID. But as a circuit combined, PVR Inox, we did about 140 million admissions still this year. 14 crore tickets sold across the circuit. This number was close to about 16.8 crores in pre-pandemic period. So we're still down about 16% in admissions. But nevertheless, I think a recovery year for us. And we are really hoping that, things evolve in FY24, as more and more Hindi film content, new refresh content comes up for release this year,
Right.
this will be a significantly better year for the industry.
Okay, hoping for a better year this year as well. But your business, like you pointed out, is really dependent on good content, which can actually generate higher footfalls for you and thus higher revenues for you as well, especially the ad revenues. I wanted to understand from you, have you been largely worried about the recent underperformance of the Bollywood content impacting your earnings for FY23? And could you give me a sense of how much do Hindi movies really contribute to your overall box office collections? I'm guessing it is the largest pie of the market share for you.
Yes, it is. In fact, in this year, roughly represents about half of our total box office comes from Hindi films, about 30 to 35% comes from regional films, which has changed this year, and about 15-16% comes from Hollywood films. So clearly, underperformance of, the Hindi film industry does impact us directly in the short term. But, we've been in this business for a fairly long time, and we think of this as more a short-term phenomenon. I think the industry, post-pandemic era, so refreshed for how the consumer tastes have evolved. And we are not worried in a country like India where, we make the highest number of movies in the world
Mm-hmm.
across languages, especially Bollywood film industries, which is one of the, strongest film industries in India, will bounce back strongly. Whether it takes 1 quarter or 2 quarters is just a matter of time.
Okay.
So we are very, very confident about, the industry bouncing back to its full strength.
But has this underperformance ever led to your thought process in changing your geographical focus or strategy of where you would like to open more screens and grow your business vis-a-vis, the Hindi belt, which watches more Hindi movies, vis-a-vis the South movies as well? Are you looking at that sphere as the growing pie going forward for you?
You're absolutely right, I think, and it's driven by two things. One, obviously, our long-term strategy has been always been to a pan-India flair. So out of the, 1,689 screens we operate, roughly one third of those screens are in South, one third are in West, and one third of them are in Northern India. But more importantly, the multiplex screen penetration in North and Western part of the country is now reasonably high as compared to South India, where the multiplex screen penetration is low. And almost 40 to 45% of new screens that we are adding now are coming up in southern part of the country.
Hmm. Okay. Your occupancies also dipped 22% odd. What is the outlook and expectation that you have? By when do we see pre-pandemic like occupancies going forward?
Yeah, I think it will take 1 or 2 quarters for movies to perform. We need 1 or 2 good months of regular content flow and people showing up at the box office. So a lot of movie watching is also driven by a lot of sentiment. When you watch a good film, you want to go back for another good film.
Yes.
And last year there were many gaps. Hopefully, with the number of Hindi films releasing this year, Jawan, Medan, which is releasing in June, Animal, Ranbir Kapoor film, which is releasing in August, and big Hollywood films like Mission Impossible, Fast and Furious 10, quick recovery in box office.
Okay. You also mentioned in your release that you're about to shut 50 screens. If you could help us understand what is the reason behind that? Is it because of the merger? Some of the screens are closely located in the vicinity. Is that one part of the reason of behind that? And also, what is your outlook for financial year 2024? How many screens do we see getting added for you as well?
Yeah, our decision to shut down 50 screens is largely based, on our annual review of now that we have a very large portfolio.
Mm-hmm.
Our focus is to ensure that, the bottom end of our screens, which, have come to the end of the life cycle, which were built 15, 20 years ago, where the shopping malls are no longer relevant. And we've opened better quality cinemas in those cities or in better cinemas. We shut down those screens because those are loss making, and shutting them down will actually improve the overall profitability metrics for the company. That's the thought process. behind shutting down. It's going to be a, regular phenomena as we refresh our circuit. And we continue to build new screens. We are adding about 175 screens this year in various parts of the country.
Okay. And if you could share your outlook on revenues and both margins as far as FY24 is concerned, do you have any target internally?
Yeah, I think our focus is to try and see if we can get back to pre-pandemic level of operating profit margins, 18 to 20%. A lot of it will get dependent on how the box office will shape up, and box office will also dictate how quickly we can do advertising revenue recovery this year and get back to that number.
Okay. And what about ad revenues? Still lower than the pre-pandemic. Is that also going to take as much time?
Yeah, I think it's partly linked to box office, but I think the integration and the merger is going to be a big aid. And our focus right now is to increase screen time. And this year, focus will be to try and get back to where we were pre-pandemic.
Right. And what about the contributions from the F&B? Is that continuing to grow significantly? And is that going to be your focus as well as a key driver of growth?
Absolutely. I think that's a huge opportunity for us. Our F&B growth continues to remain quite strong. And this merger will provide us an opportunity to integrate the F&B offerings at both PVR and Inox. And, that's going to be the big focus area. And we are expecting a strong growth in that segment as well.
Okay, well, thank you so much, Mr. Sood, for being with us on the show and discussing the insights about the quarter. All the very best for the coming quarters as well. Just like how you said, this has been a recovery year. 1 to 2 quarters is when you should see box office really performing and things looking better and brighter. Here's hoping for that and looking forward to more interactions going forward too. Many thanks for being with us for the time being as well. Well, if we look at the PVR Inox share at this point in time, the reports on the earnings, we've still seen a decline about 2% odd. Although the results were marred by this merger, the first quarterly earnings after the merger, there have been some one-offs, but definitely the management, like Mr. Sood pointed out, that things will look better over the next 1 to 2 quarters. There is an expectation that the performance on both occupancies, the ad revenues might come back to pre-pandemic levels in just about 1 to 2 quarters in FY24 as well. All right, then with that, let's move across and see how the markets are performing. In fact, they have seen a sharper decline now. The Nifty is also drifting lower below the 18,300 mark. It's 111 points of a cut right now, 400 points of a decline for the Sensex as well. Just like how I always say that there's a shift in the markets at around 3 p.m. and that's what is being played out. Now you're also seeing the small caps from the broader market slip into the red as well. So let's actually go across to our guest who's joining us right now. Mr. Divam Sharma joins in.
Well,
from Green Portfolio, the co-founder of Green Portfolio. Divam, if you can hear me, I wanted to take your first comment on the way the markets have now quickly drifted lower in the last 15 minutes or so. We are seeing a 420 points of a cut right now, slipping further as far as the Sensex is concerned. We were looking at a sharp bounce and we were thinking that markets are perhaps on a steady note to reclaim the all-time high levels yet again. But things are looking like there are going to be some speed bumps for us to handle. What is your own sense of the markets right now?
So are you able to hear me? Actually, there's some disturbance. Actually, I'm not able to hear you well.
I'll try to fix that from our end, Divam. If you could begin, we can hear you very clearly. If you can just talk about your own sense of what is your outlook on markets right now, where are the markets really headed? We are seeing some speed bumps today.
See, if you look at the markets, currently the global trends are neutral. The FIIs are positive, the DIIs are neutral. Futures and options are slightly cautious right now. The sentiment is positive while the trend is positive. So currently the markets are waiting and watching for what is happening in the US. US is slightly on the edge in terms of the debt ceiling limits being increased. The US Fed decision that is going to come in June mid is also going to be a deciding factor. The markets are currently divided while a couple of like Fed people are saying that they are not going to increase the rates, but there are chances. There are still chances that they increase the rate. So if you look at the probability currently, uh, the 85% probability is that they do not move this time, but 15% probability is still there that they increase the interest rates by 25 basis points. So that is going to have an impact on the markets, and markets are in currently wait and watch mode. We have already gone up since April. We have already gone up significantly. If you look at the bank Nifty, it has performed really well over the last 1 month or so. And from here, the investors should be in wait and watch mode. They should not be very aggressive. There are a lot of global uncertainties related to US probability of US recession as well. So US markets could react to that. The probability of US recession in by April 24 has reached 68% right now, which is pretty significant. So very high likelihood that US can go into recession with current fallout of things, how things are happening. So, from an investor standpoint, they should not be very aggressive, especially with the sectors which are affected by global FII positions, be it banking, IT. You should be focusing on domestic sectors where the consumption is domestic, and do not invest in very high valuation stocks at this point in time.
Okay, don't invest in very high valuation stocks at this point in time. Some of the results that have come about, I wanted to take your views on each of those stocks as well. Let's start off with IOC. That's the latest number that we've got on the street today. The profits have jumped 52% on a year-on-year basis to 10,841 crore rupees. The stock has reacted sharply, up 3% odd as well. We've also seen some favorable comments coming in from the government by cutting the windfall tax to nil for the oil and gas majors as well. The crude prices have been softening too, below $70 a barrel. Your own sense on IOC as one of the leaders of the OMC stocks, the earnings that have come about, revenues jumping 10% to 2.3 lakh crore rupees as well. The profits reporting a 52% jump this time around. Your own thoughts on how should one approach this stock?
See, I would not be able to answer on IOC. It's not in our coverage. We do not cover PSU stocks. But in general, crude oil prices have been like very lows. Has gone to their lows. They reached $70, and currently also they are at their lows. So, what is going to affect? I think the economic activity in India is pretty robust at this point in time, domestically, in fact. So, they should be doing better in terms of their output as well as their margins as well. So, I think it should be positive, but I will not be able to make comment as such on it.
Okay, what about Bank of Baroda? Q4 results came out, stellar numbers coming in there, profit zooming 168% to 4,775 crore rupees as well. Dividend has been declared by the bank too. Profit in fact has more than doubled in Q4. Your own thoughts on Bank of Baroda, one of the leading stocks from the PSU banks, if you cover it?
So actually, your voice is not that audible. I'm really sorry, but Bank of Baroda overall, if you look at PSU banks, they have done exceedingly well. The valuations of most of these PSU banks are very comfortable. The margins are on the rise. It is a Cinderella movement, as pointed out by Mr. Uday Kotak as well, that completely all banks in India in particular, they are going through a Cinderella movement. Their NPAs are at all-time lows. Their margins are at highs. Their credit offtake are at their highs. In fact, the credit offtake is such highs that they are borrowing through the CD commercial, the certificate of deposit borrowing has increased to a very large extent. So these stocks are definitely going through a moment of their lifetime, and it's definitely the valuations are very comfortable here, especially with a lot of these PSU banks So Bank of Baroda definitely looks a positive at this point in time from a trading standpoint.
All right. Well, thank you so much, Divam, for being with us on the show and discussing these insights from the markets. Well, the markets are drifting lower. We're just about 7 odd minutes from the shutting of the day and 450 points down as far as the Sensex is concerned. We've drifted lower than 61,900 now, 122 points of a fall for the Nifty. It's below 18,300. So the markets are seeing some sharp cuts and profits being taken off the table. 0.7% of a decline for the major indices as we speak. But we'll continue to track the markets and every movement right there, and also help you understand what is the best strategy that you can adopt in this kind of a very, very volatile market, and where are the opportunities that you can continue to invest in. Until then, thanks for tuning in. Rishi?
It's one of the worst nightmares of a mobile phone owner, misplacing or having your handset stolen. Not just because it cost you tens of thousands of rupees, but because it was a virtual repository of passwords, of photographs and videos, of crucial documents, financial information and apps, and of course, your contacts and chats with them.
Well, there is some good news for you. A portal which would track